Hello and welcome to traders and investors, and I'm glad to present you the daily market review prepared by analysts and experts from fx.co portal. Here we go. And we're starting with EURUSD as usual. Let's discuss the trading plan with Miroslav Bawulski.
Strong data on German industrial production and an increase in the Eurozone Investor Confidence Index from Santax failed to help the euro maintain its leading position against the US dollar. This suggests that pressure on the euro is mounting due to the lack of US-EU trade deal. And the closer we get to the July 9 deadline, the stronger this pressure may become. Unfortunately, there are no US statistics scheduled for release in the second half of the day, so a continued decline in EURUSD cannot be ruled out. If the pair falls, buyers will focus on the support level at 1.1713. A false breakout there will serve as a signal to buy EURUSD in anticipation of a return to bullish momentum and a retest of 1.1749, which earlier acted as support. A breakout and retest of these levels would confirm a valid entry point with a target at 1.1787. The ultimate target will be 1.1825. where I plan to take profit. If EURUSD declines and shows no activity near 1.1713, pressure on the pair will intensify, potentially leading to a deeper drop. In this case, bears could push the pair down to 1.1676. Only after a false breakout there will I consider buying the euro. Alternatively, I plan to open long positions on a bounce from 1.1634, with a target of a 30-35 point intraday upward correction. Sellers continue to put pressure on the euro and are doing so quite effectively. But to confirm this presence of large players in the market, resistance at 1.1749 needs to hold. I will act only after a false breakout forms there, targeting a drop toward 1.1713. A breakout and consolidation below this range would be an ideal sell signal with a move toward 1.1676. The ultimate target will be the 1.1634 level, where I plan to take profit. If EURUSD rises in the second half of the day and bears show no activity around 1.1749, just above which lie the moving averages that currently favor the bears, buyers may regain the initiative and push for a retest of 1.1787. I will sell there only after a failed breakout. Alternatively, I plan to open short positions on a bounce from 1.1825, targeting a 30-35 point intraday correction.
And we're starting with pound sterling dollar pair with Tin Lao.
On the hourly chart, the GBPUSD pair traded sideways on Friday. Today, a new rebound from the support zone 1.3620-3611 could give traders hope for a reversal in favor of the British pound and a rise toward the 200 Fibonacci level at 1.3749. A consolidation below 3620 and 3611 zone would increase the likelihood of a continued decline and the pound toward the 127% Fibonacci retracement at 1.3527. The wave structure indicates a continued bullish trend. The last completed upward wave broke above the peak of the previous one, while the new downward wave didn't even approach the last low. Paris traders still see no reason to form their own trend, and the dollar has very little fundamental support. Trump's trade war continues to weigh heavily on the US currency. On the 4-hour chart, the pair reversed in favor of the US dollar, just a few points short of the 127% Fibonacci level at 37.95. Since the decline was unexpected and may end quickly, we believe it's better to analyze the hourly chart for now. No emerging divergences are seen on any indicators.
That's all for today. See you online soon.